This is the MTPredictor Weekly Market Update for February 17th. So it is a President's Day, a holiday here in the States, and so markets are closed here. And just going to do a quick update, get things set, because we did have some significant movement last week as Janet Yellen took the helm as Federal Reserve Chairman. The market seemed to like that, as she is a bit more dovish than Bernanke, and as far as the quantitative easing goes. So let's go back here again. This is the October highs in 2007 before the crash of 2008. If you remember correctly, we had a Hindenburg omen over the market at that time. We did get that crash, but at the time, once the correction and then crash was underway, we had this swing high here. We take our decision point tool because this gives us a level here. Even though the market was down here, we anticipated if it does rally into this level, it should be in another area where the market may correct from. And so we had that on the chart well ahead of time, and we were anticipating, as the market was coming up here, we had that nice round 1800 in the S&P, and we thought that would be a logical target, and it did reach that level. And then we saw we had strength in our strong trend filter here as this oscillator reached the gray band at the top. That's a strength band, indicating that maybe more upside ahead. So we reached that level, went beyond there, closed there 1835. We had a sell-off a couple at the end of January, and been rallying here in February. So we haven't taken out the highs yet, but we'll see as we go down now to the weekly chart. And let's take a look at what we have here. So I'm just going to, here's our monthly resistance here. I'm just going to remove that so we know it's there. But let's just come back here now and check the pattern. Because remember, when we projected this actual wave 4 here ahead of time, and we're anticipating that the market should find support here. If it does, we should get that blue buyer's candle to form. We did get that, and the market, has rallied off of this wave 4 level. So we can project wave 5 up. We did this ahead of time last week. Give us those targets. So here was the minimum wave 5 target. Here's our typical wave 5 target. Typical wave 5 is typically where we anticipate wave 5 ending before it corrects, but it sometimes does happen in the minimum level here. So we can also take a decision point off the top of wave 3 here, and we see I have overlapping resistance here. So we should anticipate that this rally at a minimum should reach this around 1850, 1852 level, and then up into this 1880. And then above that, typical wave 5 would go around 1900, 1905 to the at the bottom level. So 1900, another nice round number. We'll see how market reacts, but this would be another level here in minimum wave 5, and where this DP is, where we could anticipate another correct or sell-off from that level. If they, well, we'll look at, when we look at the daily chart, we'll look at what we might anticipate up in this level. See how we had the sell-off here, and you've got a red candle, red candle. These are telling us sellers are overcoming buyers. This is a neutral candle, this black one. But here we had buyers overcoming sellers. So when we rally into this level, if we reach this level, we won't pay attention unless we get a red seller's candle that forms in this level to tell us that sellers are actually overcoming the buyers in that level. All right, it might just go right through this level without any indication sellers are overcoming buyers until we get into typical wave 5. We won't know. So let's go down to the daily chart and just see what that looks like. You'll get a little better picture of the rally here. So I'm just going to scrunch this up. So we know a couple of things why we anticipated this would be a rally level. We had the wave 4 from the weekly chart. We also, if we take our decision point off this swing low here, we knew, that this would be another level of support, and the trend which was up, if it corrects to this level, should continue up if this holds as support. We did see that, and you can see in that level, I mean, you had the big black candle here, a neutral candle, and then followed by the blue buyers candles. We had the high volume spike coming in. This was telling us, giving us an indication once we had the first blue buyers candle to close on this particular day, that in fact buyers were now overcoming sellers in that level. Again, it was an area you had to be careful, so it might have been something that you moved your stop up fairly quickly, or at least once you reach the 100% initial risk line. I'll show you if we use this as a target here. So once we achieved the 100% initial risk line, because this indicated that there may be more downside ahead. All right. Now also we were looking at this level. If we take a look at the wave pattern down here, as we had a 1, 2, 3 wave 3, so we were anticipating that correction back to the up to wave 4 here. And remember, we projected that level. So here it is here. Now the S&P has gone through that level. We'll look at the Dow in a second, and the Dow hasn't quite taken its level out in wave 4 here. All right, so here's the next target from the weekly chart. All right, but you see how we came into the level in this wave 4 level. You've got black candles, black candle, black candle, black candle, blue, first red seller's candle. It's outside of the resistance areas. This is the first time that we had sellers overcoming buyers on this particular day during this whole move. So you wouldn't be setting up any trades here. So this is how, we use the Elliott wave patterns, that we anticipate a rally into this level, and our next thought would be that we should then roll over into wave 5. All right, but the market decided to do something different. We never got an indication in the wave 4 that sellers were overcoming buyers. So there's nothing to be done there. We're not trying to set up a trade in this level thinking the market's going to go down, because the market was telling us something else. Okay. So this was the first indication, but we're not in any resistance area here on the S&P. We've taken out wave 4, basically invalidated it as far as this market goes. Here's your next major resistance level here. All right, if we look at the Dow, go to the daily chart of the Dow here. I've already got the analysis on that we've had the last few weeks. So same pattern. This we had a 5-wave pattern up. You can see we reached the typical wave 5 target, and again after 5 waves up, you anticipate a correction back to the wave 4 DP. That's this level. It unfolded just as the S&P did in a 3-wave pattern. Now you can see the rally. Here's the wave 4 that we projected. We're right in that level. Now we don't have sellers overcoming buyers. You can see most of these are either blue buyers candles or neutral candles. All right, and so we don't have any indication here that sellers are overcoming buyers in this resistance level. So there's nothing to do here. If this week we get red sellers candles, that might be something to look at. If you're looking maybe to set up a trade in this area, but remember that the S&P has gone beyond its wave 4 and basically invalidated it. So in that sense, the Dow maybe just reaching its wave 4 target here over the last few days of the week. Last week, S&P is gone further than that. So let me just clear this off for a second here. And so if we're in wave 4, certainly we can project wave 5 down. So let's do that in case we do get if things do set up in the wave 4 in the Dow. You'll have targets here. So you've got your minimum wave 5 target here. That'll come in right around 15,375 area here, and then the typical wave 5 around 15,230, 235 level here. Right, but we don't have sellers overcoming buyers, so nothing to do there. And your next resistance level, well, let's just take, this is the high here. Let's take a decision point off of this swing. And that's up around 16,000, we'll call it 690 is the beginning of that resistance area. All right, so we had strength to the downside as the market was rallying here. It's come off that level, but we'll see what develops here. If we continue to get black and blue candles, it's just going to tell us that the market is there's still don't have any indication sellers are overcoming buyers. and certainly if they get out of this wave 4 resistance area, then this is, they're probably heading up here, at least the S&P, to that next target that we looked at. The DAX, again, following, pretty much following the U.S. market here. It was 5 waves up there, again corrected beyond the wave 4 DP, didn't quite reach the DP off of wave 1. This is where the U.S. markets found support and rallied, and the DAX has been heading there with it. You see the next major resistance level there on the DAX, and we talked about that DAX 10,000 is still out there, and so we'll see how things go. I mean, I don't anticipate just a straight line up here. I'm sure we'll get some type of, we might reach some of those levels in the Dow, but probably not going to be in a straight line. You'll probably get at least some type of few corrective days before they attempt, if they're going to attempt that 10,000 level, they're going to have to take this level, at least get to the top of this resistance level here. But it's out there, it's a big round number, and so it's not going to surprise me if they go for that. Dollar index, again, here was those significant lows in the dollar index. The decision point buy signal here on the weekly chart, that that target's already been hit, but you can see it's a DP that has acted as resistance, and the dollar just hasn't been able to get through this level. Keeps testing it and then selling off from these levels. And this was a good buying opportunity here. The nice high volume spike coming in at the low, indicating that buyers or professional buyers were stepping in there in the dollar, which was true because we had people like Jim Rogers declaring that they had purchased down here. So, and then there's the rally, but just again haven't been able to get through those levels there. In the Australian US dollar, we've been looking at this. Here's the weekly chart. And if you remember, we went and we had this decision point. Again, I'll take a DP off at the last swing here, and you see this is the level that the software was seeing, and why it gave this. So I want to make that a little bigger. Why the software gave us this decision point buy signal here, because it also had a lower low in price and the higher low in the oscillator. So it saw it was in the major weekly support area along with divergence. So a potential turning point in the market. Also, we had a five-wave pattern down here. So in terms of Elliott wave, we're anticipating a correction. If I put the analysis on the trade setup here, the software knows a correction is typically back to the wave 4 DP, to this level. All right, now potentially, you could trade this, but chances are you maybe go down to the smaller time frame. Let's go down to the daily time frame, because this is what we set up on the daily chart, which was interesting because first we had a nice 5-wave pattern up here right into the typical wave 5. See how the red sellers candles come in here, telling us that sellers know overcoming buyers. So this is an opportunity to be a seller. Again, we anticipate a correction back to the wave 4 DP here. That would be the first initial target that you would look at, making sure you have at least twice your initial risk to that level. So something like this, trade setup like this would work. When it takes out the wave 4 DP to the downside like it did here, all right, now we anticipate that they're going to wipe out this whole 5-wave pattern up. So we go back to the bottom of wave 1 here. We take our decision point tool, and that gives us a level of support here that we anticipate that this Australian dollar, if it takes this level out, should find this level, which it did. And as it did, it unfolded as a 5-wave pattern down. So now you've got a 5-wave pattern down on the daily chart. You've got a 5-wave pattern down into major support on the weekly chart. So it's a good high probability turning point for this market. So this is why we looked at this area. You had the high volume coming in. Now this is forex, so we don't put a lot of weight on that. But we did have some activity, we'll put it that way. Here's the wave 4 DP. So as we come down here into the minimum wave 5 target, that would be your first opportunity as we're in the weekly support to be a buyer. You've got your blue buyer's candle here, and we anticipate again a correction back to the wave 4 DP. That's this level, so that would be the target. So that's what we had set up a few weeks ago in this market, and you can see where prices has moved, not quite to the target yet, but you can have your stop to break even, and then see if it can just finish out there at the target, which would be about 3.7 times your initial risk. So that's the kind of things that we're looking for using the additional tools in the software to uncover these potential trade setups. These are all just low risk, high reward opportunities. That's really what it's about. All right, let's finish up with silver. This market has also been pretty active. The interesting thing is, for you go back to after 9/11, when gold and silver started this bull market there in precious metals, and then it began moving with the market, with the stock market, which it typically doesn't. And it was when the crash of 2008 happened, gold sold off as well, gold and silver, as well as the market. And then after 2012, things began to diverge, where the market began to move higher. Gold and silver, you can see obviously, began to sell off. After the wave 5 high here in silver, we anticipated that correction back to this wave 4 DP. All right, so there was these markets began moving as you would normally expect when stocks are going up, that the precious metals are heading lower. But now we're starting to see here. Remember, we've got this 5-wave, or our 5-wave pattern down that we've been looking at here. Whoops, I want that. Let me just pull it. All right, so we had this pattern here, the wave 4. We had the red seller's candle that we look for in the wave 4 resistance area, and we set this up. Now the stop is to break even because we achieved 100% initial risk line, and this trade is only a reward side of about twice your initial risk. So what we're looking for in here, I didn't see any volume indicating that any rally here was for real, but we did get volume came in last week, and you can see we finally kind of broke out of this area. So we'll probably find some resistance around this $22 level here. That's just your 50 period moving average, and then the DP here off of wave 4 is another around that just above $25. So if this is for real, then maybe we see those levels. We couldn't be sure if the bottom was in here, because of the fact that we had a pattern develop in wave 4, and if we could maybe retest those lows again, get into the wave 5 target, and then maybe the bottom was in. It's possible it's in here now, that this was the bottom, because this was remember, this was a DP off the wave 4 swing, and what happens is this DP, if they can take it out to the downside, then we'd go to the bottom of wave 1. Right, we take a DP off of the bottom of wave 1, and we'd say then the tendency is they're going to find this level. Right, but they haven't been able to take out this wave 4 DP, and the tendency is if they can't take this out, then the trend, which was up prior, should continue up. So this is what we're looking at here. But again, this is a position that stops are at break even, so if they take it out, that's fine. The only thing we've lost is some time there. And the thing that we've been playing is this is the paper market. I was actually a buyer of silver down in this level of physical silver, all right, not the ETFs or not the futures or anything like that, but a physical silver, because there was a divergence between what was going on in the physical market and the paper market. There was a huge demand in the silver bullion, whereas the paper was everybody was trying to get rid of the paper. So that's a little different scenario there, buying the physical and selling the paper. So we'll see if the bottom is actually in. We've had the volume now. I see that's come in, that we anticipate that we were looking for on the market turns. We'll see how far the rally goes and how that affects the stock market as well. If that's giving us any indication that stocks may begin to weaken. Are they going to move together again? It'll be interesting to see if, in fact, gold does resume and starts, new bull market, gold and silver, and as well as the stock market. We'll be back in that pattern again. So whereas they diverged the last couple of years, maybe these begin to move in tandem again. So we'll see how it plays out. Keep our eye on it. Again, risk-free trade there anyway. We'll see. If this does turn out to be a true rally here, then obviously we want to wait to be a buyer on a pullback. We'll see what kind of pattern unfolds there. Not chasing price anyway. All right, so we'll wrap it up there. Now, as far as economic data, obviously nothing out today as the holiday and markets are closed here in the U.S., but a good full slate of economic data the rest of the week, and including your FOMC minutes on Wednesday at 2 o'clock Eastern, and CPI and jobless claims on Thursday, and home sales on Friday. So should get some more movement in the market after today. We'll see what sets up, and we'll go from there. So have a good rest of your week, and we'll see you back next week.